Well, hello, folks. I'm Ellie Little, and this is your weekly NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective each time, asking ourselves what happened last week. What does it tell us about the coming one? Do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. As far as what these markets are doing and what they're telling us, we start tonight with a view of the qualified trends on the various time frames, in particular on the weekly, which is the intermediate term time frame here, and on the daily, which is the short term time frame. And if you look at this, you actually have two of them now, discretionary technology, pointing to a sideways trend. Everything else still bearish on this time frame. Over here, everything is either bullish or sideways. And so you've got supreme strength on the short-term time frame that we have seen, and you still have this weakness out here on the intermediate-term time frame, but it's slowly starting to turn. And if you move out to the monthlies, right, you only have weakness in the energy sector. Outside of that, everything still bullish on that time frame. So what's the health of the market? Long-term bullish. Intermediate term, a little more iffy. Short term, bullish as can be. What does that say? It says this thing's probably going to continue to work higher over time. And if we look at what happened last week, we actually had a slight up. Russell still dogging it, down 3.6%. 6.7 on the NASDAQ, just slightly higher now on the S&P on the year, and the Dow is just slightly lower. So overall, after the big swoon in the summer, right, where you come in, you go sideways, 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 big swoon down, and now a big push back up in these markets. So if we move over to the charts, take a look at what it looks like. Of course, last week we had the Fed. The Fed comes out and tells us more than likely they're going to raise rates in December, but market wouldn't even pull back on that, still jutted higher over the breakdown bar on the S&P 500. Closes over it, and that's on the daily, that is, closes over it. That top, or actually the close was 2079. That top over there was 2076. So you get over it, you stay over it. You also, if we pull this over to a weekly, you also have done what seemed to be nearly impossible to do, and that was a push off the lows back to these highs on the S&P 500. You still have, and I'm drawing out the two retest regen zones that are higher, you still have these that are going to give it trouble up here at the top, and you've got this little breakdown bar on the weekly now that will give it trouble. But outside of that, it's about those retest regen zones that it actually got over, which tells us that more than likely this market move is for real, and that was these bearish retest regens. Got over them, stayed over them, and I actually drew this one here just slightly too high. Let's pull this one back in a little bit because it actually got over both of them and stayed over them both. And so you have a huge run straight off the bottom all the way up to the point where it breaks down that area where you should see selling. It breaks it down, stays over it. Now, I always say that you want to see it do it for, one or two bar, an extra bar or two. And so you would like to see, if you're bullish, you'd like to see it hang up here one more bar at least over the highs. And then that would give you a fairly strong confirmation that, in fact, this thing is going to work higher over time. But seriously, when you look at this move, you look at the extent of the move over a 5-week period, folks, that's real buying. Something somewhere for some reason is buying this thing, and whatever that reason is, I don't have to know it. I just have to know that they are, and they're probably going to try to continue it. And that tells me, when I see this kind of a move, that it's really not this, it's more like this, and that's what you're always trying to do, is decide what trend really is. And so worst case, probably sideways, and that means it could pull back all the way down into here. But it's probably sideways and potentially more up to come down the road somewhere. So that's the S&P 500, how it looks like. If we look at the NASDAQ, right? You got the same situation on the broad composite. You get over that breakdown bar there. You look at it on a weekly. You tested the top of the breakdown bar, couldn't stay over it. But you did get back over the highest retest regen zones that were available here. Also telling you that more than likely, trend is going to try and work its way back to a bullish scenario. It's certainly going to be sideways at worst. Russell's the fly in the ointment. Russell can't get going. Russell does get the breakout over the swing point high, but then immediately fades back into it to do a bullish retest regen on the daily time frame. So that says it can come all the way back down to the very bottom of this, right? Because it's an immediate retest. So you can expect it to potentially get all the way back down in there, and that will be the test when it does. The Russell still has a swing point high up here, has another one up there. And in fact, if you pull the Russell back and look at it on a weekly time frame, and let's clear the chart. If we look at it on a weekly time frame, that swing point high is up here. But the key thing here is that this thing is still 10% off the highs. So you've had a huge sell-off. Everything else is rallied back to highs or near the highs except for the Russell. What gives? What is it telling us? Is this telling us that really, when we say that the worst case in these markets is this way, or is the Russell telling us that that's the best case? Right now it is. And what's even more interesting is this time of the year is typically when the Russell outperforms everything else. So it will be instructive to watch this divergence play out over the next few days and weeks, and we'll see what it really wants to tell us. World markets, you've got kind of a Jekyll-Hyde situation there as well. A stronger dollar is putting more juice into the European markets because that means the euro is going down. That's got these markets pushing higher. If we look at the DAX on a weekly, that swing point low that was broken over here, the top was 10,810. You close over it, that says the bearish retest regen that was in effect here also has been wiped off the board, and telling us that more than likely this is going to at least work sideways instead of down. And so that's the scenario there. And if you look at it on the CACs had already told us that. The CACs had already gotten on the daily, had already gotten over swing point highs, had broken over the swing point low retest, and here was a swing point low it's still messing with, but the one it originally had was back here, got over it, and now has pushed up to the next one. So I don't think you can look at Europe and think that there's weakness across the board in any way. The weakness is not in Europe, it's in Asia. And it's in what we call emerging markets, right? And most of their debt is dollar denominated. And that puts a lot of pressure when the dollar goes up on these particular equities. You had swing point highs here, here, and here that you broke over, right? Now as it comes up, it's coming back down. It's going to come back down. It's going to start testing into these. And then we'll see, like, for example, on the Hang Seng and elsewhere, if this thing can actually get some sort of a move up, down, and then back up again. That's the way it looks in Asia. If you look at some of the weaker ones, they're struggling even more. But then if you take a look, and I want to look at Hong Kong one more time, if you take a look at it on a longer term time frame, you can see that here you don't have as much strength as you see in Europe. The bearish retest regen zones here so far, quote unquote, have held and are trying to regenerate lower. So we're going to see retraces in Asia, and then probably another attempt to get over these farther out in time, maybe a few weeks out. And when we see that, that will give us a clue as to what Asian markets are going to do. And the question with them will be, do you get some sort of a pullback that then's bought that can take it higher? Or is this really just a bounce in some sort of a larger structure to the downside? So far, everything else around the world has pointed more like this, sideways, or potentially, to the top side. And so we'll have to see how Asia does, because all these markets in time move together. They affect each other. And if you have Asia, extreme weakness in Asia continue, the world markets, European, American, they're not going to go that much higher when you have that kind of a drag elsewhere in the world, in China and in Hong Kong. So that's the world markets and their effect. And then as we started the show, we talked about the strength in the sectors on the intermediate term time frame. If we take a look at those sectors, the one thing that you'll have to note here, and I'm going to bring them up and put them up on the weeklies. And I'll just start with the biotech, and I'm going to grab this and get us to the weekly here. What you're going to see is that all of these on the weeklies, what you want to look for is, where's the swing point high? In this case, it's up here. And let me draw that a little bit differently. So you got a swing point high right up here, right? And price point right now is down here. So you've got to make a fairly large run in the biotechs, right, to get back and break a swing point high and to change the trend on this time frame. And if we look at just the majors now, and so forget all the minors and just look at the majors, I'll look at the transports first. How far does it have to go to break a swing point high? Not that far. It's almost there. That would be a transition of trend. If we look at the XLs, XLB, XLE, all of those, where do they have to go? Well, here's the XLB. It's got to make it to 46.51. It's trading at 45. So you got to go another 2.5%. And that's probably best case if you look across these, 1.5%, 2% at best in most of them. Financials, they had made the run up there, but they've got to go all the way to the top to get back up there. And the industrials, they've got about, not that far, maybe about 1.5%, 2% to get up there. And if you go down the boards, all of these, those are the closest ones, and those are the ones to watch, right? Because if we can get more than 2 or 3, or get, say, 3, we've already got 2, on this time frame to switch, then more than likely you're going to get the rest of them, or the vast majority of them, which would say that the market really has healed. The correction was a correction. The correction's done, and this market's going to work sideways, at worst probably higher. And it would just be another confirmation to that thought, and therefore something to monitor and something to watch. Where is the risk? Well, the risk is geopolitical. The risk is also with these central bankers. If they don't follow through, in the case of more easing both in China and in Europe, or if the Fed actually does raise rates, then we'll see how this market wants to react, because so much of the action we keep seeing is really tied to currency manipulations based on central bank actions. And, one of these days that won't be the case, but right now that still is the case, has been the case, and it continues to be what drives these markets. So if we wrap it up here and ask ourselves, where are we going? Well, we had a big breakdown, and that breakdown ended up being unable to hold these markets down. They come all the way back, right? They're up here toying with the tops again. I do expect you're going to see some sort of a pullback just as a result of the way they have come back. And what I mean by that is in terms of time and price. Folks, that is not a sustainable move, just as this was not a sustainable move. You have to get something more like that if you want to make it sustainable. And so you will see this market pull back, whether it's this week or next. It's going to happen. And when it does, it's probably going to set up some sort of a buying opportunity to come back up here and test and potentially break this thing even higher one more time. That is the view for this week. I hope that helps. And as always, tell a friend, tell two. I'm LA. This is and was your weekly NeoTA wrap. Have yourself a great night, and I'll see you next time. Good night.